Hi, everyone, and welcome to the Coinbase Institutional Markets Call. I am your host, David Duong, the head of institutional research here at Coinbase. I am once again filling in for Ben Floyd, who is in fact back. I know I promised that he'd be back this week, but he did have an urgent meeting that he had to take at this time. We're recording at a slightly different hour, but I am joined by my fellow guest host, Georg Toropov, who is our senior CES trader, and as well as David Hahn, who is our research analyst. And we are going to be talking today with Melanee Hannock, who is the Chief Digital Officer at St. Jude Children's Research Hospital. And we're going to get into some amazing topics about how they're accepting crypto donations right now. But first, David, real quick, you put out this ETH and L2 paper very recently. I understand that it's been dragging you in multiple directions. What's been happening?
Yeah, I mean, the ETH's L2 scaling roadmap has been obviously front of mind for everyone in the community, really, compared to you see Solana's success. And I think that, Solana has a lot of great things going on too as well. But I really wanted to kind of dive into, are L2s the right way to go, the wrong way to go? And I actually ended up with a surprising conclusion that, maybe L2s aren't even the real issue at all when people are leveling a lot of criticisms against, the extractiveness against ETH. And I think that's something that I'm looking forward to dive into in this podcast with you.
Sounds like a pretty spicy take. So I can't wait to listen to that. But before that, please everyone scan the QR code or visit the link in the show notes to see more of our research. Please also like and subscribe to this podcast so we can produce more excellent content for you in the future. And with that, let's get started. And for today's interview, we actually have a very special guest, Melanee Hannock from the St. Jude Children's Research Hospital. She is the Chief Digital and Innovation Officer and also now the Interim Chief Marketing Officer. I understand that's a new role for you, Melanee. And I think officially it's called ALSAC, St. Jude's Children's Research Hospital. But maybe you can just tell us a little bit about your background, a little bit about the work you're doing, your current role as Chief Digital Officer, and how you got into all of this.
Yeah, great. Well, first of all, thanks for including us today. We're happy to be here. And I do work for ALSAC, St. Jude Children's Research Hospital. So we are the fundraising and awareness organization for St. Jude Children's Research Hospital. And I've been here 17 years, so I've had a lot of fun in my journey here. Originally started as the Director of E-Marketing, if you can believe that title existed about 17 years ago. And we really built all of our digital infrastructure, our marketing, our performance marketing, so all of our advertising, as well as innovation and strategy. So I've been around the organization in lots of different ways doing fundraising and awareness for the kids of St. Jude. So that's been my journey here and my role at ALSAC. And then prior to that, I actually worked 10 years in the entertainment industry, working on games. So my background before this was at the Walt Disney Company, where I worked on massively multiplayer online games like Disney's Toontown Online, or working on lots of games that Disney delivered straight to consumer through the internet. And then before that, I worked at Hasbro Interactive and worked on lots of games like Backyard Baseball, Backyard Football, Easy Bake, Tonka, Thomas the Tank Engine, Barney, lots of kids games. And probably my first game that I ever worked on was Roller Coaster Tycoon Corkscrew Follies, which was the expansion pack for the original Roller Coaster Tycoon. So spent 10 years doing that. So my whole background's been in marketing and entertainment and maybe bringing some joy to the world for kids. And I'm happy to be here today because I've been working in software for a pretty long time.
This is great. Thank you so much, Melanee. And we are a crypto podcast. So, of course, I have to, ask you about your involvement in the crypto world because we have you on here given the fact that St. Jude's accepts crypto donations. And I guess the big question is, I'm sure a lot of people ask you this, why? How did you first decide to get interested in accepting crypto donations?
Yeah, so it was quite a while ago now. What we were finding, because I've had innovation as part of my journey here, so you're always testing and trying new things. And I want to say back in 2017, 2018, we saw a surge of people who wanted to give crypto to us as a charity. And we really just didn't have a way to accept donations in crypto. So we started to look into how we might be able to accept donations in crypto and have crypto communities start to support us. So that was first how we started, just meeting people where they were, and then as an innovation project. And honestly, over time, we've been embraced by crypto communities. We love them, and we've been continuing to reach out. So that's how we got started. Is people really just wanted to give to us in different ways that we weren't accustomed to having donations being given to us.
That's awesome. And I'm guessing that these crypto donations or enabling crypto donations. What's some of the biggest benefits that you guys have seen? Like, do you guys have access to a new donor class where they're not able to donate to you previously?
Yeah.
Was it mostly along these lines, or was it also even easier to donate as well? Or what are some of the benefits?
Initially, it wasn't easy, so that was part of the biggest friction. Is not easy to give crypto donations to anyone. And so that's been a journey with us over time, is just trying to make that easier and simpler for people to give to us. But it is a different audience, of course. Most people who give to a charity, generally speaking, are a little bit older. And so what we found with crypto donations is it's much younger donor, mostly male, that's giving to us. So it's definitely a different kind of donor that doesn't traditionally give, at least to us, like in volume. So that's been exciting and fun to embrace, again, the crypto communities at large who've been giving to us.
And that's awesome to hear. I mean, it's really cool to hear that just by unlocking, a new avenue of payment, that you guys are unlocking essentially a whole new demographic. I think one thing that's I'll be quite curious to hear about is, are there specific types of crypto that people are donating in? Are they donating mostly like Bitcoin? Is it a lot of stable coins like USDC? Is there a kind of a breakdown or a kind of a favorite, crypto that you guys have been receiving primarily in?
Yeah, I mean, for the most part, start off with mostly just Bitcoin that people were giving us. And then like Bitcoin, Ethereum, Ripple, we do get donations in other smaller currencies as well. But for the most part, it's been most of the majors that have been given to us. I will say we've been the beneficiary as well of NFT sales. So we had a lot of people who gave to us over this last period. So the first tranche, let's say a bull market, that people were giving to charities was the 2017, 2018 like bull run, where mostly we just saw crypto. But the last version, when we saw in like 2020, 2021, we saw people who were like auctioning off, let's say, NFTs, like Invisible Friends, where they auctioned off the golden Invisible Friend, and then proceeds of that came to a charity like us. We saw many other communities as well, like Pudgy Penguins, Sappy Seals, Refik Anadol, Flower Girls, Multiverse of Gregs, like a lot of different communities that embraced us, not only in the NFTs and then selling the NFTs and then the proceeds would come to us, but also just supporting us as communities. So we've really seen us be embraced, which we are incredibly grateful for lots of different communities, and not just men too, like the second time around, more female audiences as well. So it's been kind of a fun whirlwind.
I'm kind of curious, is there like an equivalent that you would have in traditional assets? Like do people normally give you art, for example, that in order to kind of realize that value, you have to sell it in order to fund the research? How does that work?
Yeah, sometimes I do. So for charities, like we'll have charity auctions, let's just say. We have a number of, we call them dinners, galas, and golf events. And as part of those events, things might be auctioned off. Like in a local community, it may be a local artist, or there might be like a big piece of art that would be donated to us. So we have over the years had people give us physical, traditional kinds of art that could be auctioned off. So this was more of an extension into digital art, where now digital art being either sold or auctioned off, or proceeds of, let's say, a whole series that was being minted might have come to us. So it came in a wide variety of different ways. But it's kind of neat to see the extension of what traditional kind of giving might be with traditional art now coming into the digital spaces and being on chain, which is pretty cool, actually.
So what proportion of donations do you currently estimate come from crypto? And how do you think that's affecting the demographics of your donors?
Well, right now, it's still a small proportion of the donations that we get are coming through crypto or crypto communities. But I think that's going to grow. I'm obviously a crypto bull. I think that, the use cases have only just started for what people would want to do or give within crypto to support their favorite charities. And so I think this is just the beginning of something that's going to continue to evolve over time.
That's incredible. I'm kind of thinking, one thing that, is challenging about this stuff is that, crypto is a totally new payment framework. I'm kind of curious if you can walk us through, what have been some of the major challenges that you guys have encountered, or has it just been kind of, all butterflies and rainbows the whole way?
Oh, I wish it was all butterflies and rainbows. And I love butterflies and rainbows too. So, I would say that the challenges have changed over time. Certainly, if you go back to the 2017, 2018 timeframe, literally just being able to give money and figuring out how to accept those kinds of payments for us was something completely new. But then as time has progressed, so if you come up to the time period now, other places where we spent a lot of energy was literally in policies and workflow and things to pave the way to protect the organization, whether it was standards of how we might accept payments, the internal practices for either holding or converting the digital currency, whatever it was, hardware wallets. So as you can imagine, like managing wallets wasn't something that was a part of really our vernacular internally, as well as our set of technologies that we might support. So we had to build that. But we spent a fair amount of time, and we have a brilliant person here, Mark Sepulveda, who manages this, and he's figured it all out and has really helped to educate not only myself, because I was in this space, has been in this space for a while, but everyone else around us, because often it's an education for lots of, let's say, non-crypto communities to even understand what is crypto, what does it mean, what is on-chain, what is a wallet, just lots of just basic things like that have been, I wouldn't exactly call them hurdles, but definitely things we needed to tackle in order to accept payments and then have people understand. And then if you continue to evolve it, like what is an NFT, right? Well, there's a non-fungible token. And how is this just the beginning of like a use case that we might consider as art? But we have a lot of events. I just said we have dinners, galas, and golf. Like think about a future there where we could token gate an actual event to get into the event and just show your QR code or show your actual phone or, and then have that be exclusive. And not only exclusive access to the event, but then what are the other benefits you might get for that exclusive access? So basically, it's just been a lot of education training, probably like behind the scenes governance things that, everyone has to work with, especially for institutions, right? Like y'all are very familiar with all of the paving of the roads, I guess you would say, when you're trying to go somewhere new.
Yeah, and you talked about your own education. I think we all have had the same path at some point in our lives if we're in the crypto space, and we have to recognize that there is a learning curve. It's not the same as kind of just getting on the internet or web 2.0 and just kind of using Google or Facebook or any other application. I would be kind of curious, what role does education play in your crypto fundraising strategy? Because I'm sure you have to spend a lot of your time educating donors, the public, other nonprofits on these assets.
We do. We actually also took an opportunity, on our website to have some information on our website as well. Like, if you come, like, how can you just make a donation? Again, that's why we invested in some internal resources as well. Like I mentioned Mark, but like someone who can reach out and be a part of these communities to either help them make a donation or follow up after a donation has been made, and then be a part of the communities. I will say too that we've made some investments as well. So in like smaller ad campaigns that you might see that are out there to get the word out that, hey, we do accept crypto donations. We do love to work with communities, and we see this as a space to grow. So that's more of our external. And then I just mentioned our internal is where we have quite a bit of education, like I said, for what is the category? How is it growing? How is it going to be the same or different in the future? What other institutions like Coinbase, what are you doing in that space as well to try to grow education and training? So we're often doing things like that, internal and external, to really just broaden understanding, I guess I would say.
No, I mean, education, is super important. But I know one thing that you talked about, I want to dig into a little bit more, is you talked about different waves. In 2017, 2018, you had kind of one class of donors. Last kind of big one, you had like NFT sales. I'm kind of curious, where do you see this kind of going forward, like crypto donations at St. Jude's in particular, over the next 3 to 5 years, and then in the near future, especially given that I feel like have been at the forefront of a lot of digital transformation. So how do you kind of see this evolving?
Yeah, I can see a lot of ways that crypto can evolve. The simplest thing is taking some things that already exist today, but just having them be a part of the process. So, for example, today you might go and you could give to lots of charities, including us, at a checkout, like at a store, right? Like, hey, would you like to add on $1 or $5 or something while you're checking out at a store? I could see that be a part of just you want to add on to like either something you're buying online in crypto, or have some of that just like transactions if you're trading. Like, do you want to donate part of this to a charity? So just simple ways where there are already transactions that are happening could happen in crypto, but they don't necessarily happen today. I could also see a day where, like dust, like just you have this extra little pennies of different crypto that's out there right now in your wallet, but you can't really transact with it. Maybe the gas fees are too much just to like transfer it. So like donating all of your dust to a charity could be something that could happen, but doesn't necessarily happen today. So simple things like that, I think, or just round up. Like you'll see round up often as something that you can do in traditional giving. I think that's something that could be easily translated to crypto. So that's like near term things that I think could happen. But if you start to think longer term and you think like, when will there be a day when, let's say an NBA team, so pick a professional sports team, where you can get your ticket, your season's pass, and have it be in your wallet, something that you have on your phone, and it's on chain, and you're getting exclusive access to whatever things. Again, like a token gated access to go to the actual arena, but maybe then behind the scenes. I see that same use case within philanthropy, where maybe you're a VIP of some sort, and you can get this in your wallet, you can carry it with you, etc. And you can get special access to, like for us, we might have a special concert where there's a celebrity or a famous musician or something. Like maybe you can get behind the scenes access there by, that's another use case. Another one, actually, you can't really see the campus. It's sort of behind me and to the side, but we have bricks on campus. So like you can actually buy a brick and it's physically on campus. I can see use cases in the future where you could buy the brick, you could have the NFT of the actual brick. The physical asset of the brick is also then on campus, and At some point, it doesn't exist today. Maybe you can like zoom in and see your brick on campus, where it actually is physically located, and you can stitch all of that together, and you could show people like your physical brick, right? So I think there's lots of things in the future that could be near term for philanthropy.
Yeah, I think it's fortuitous for us that you happen to be both the chief digital officer as well as the interim marketing officer, because it sounds like a lot of this comes into the intersection of trying to keep your not just brand awareness but engaged an engaged audience. And I think that we often kind of overlook that aspect of crypto, because it sounds like you're utilizing the technology right now in a way that really kind of, keeps people involved here. Maybe it's also a way to help maintain the donor trust. I'm not sure, but, how do you see that kind of continuing in the future?
Yeah, I think there are lots of inroads into the future. In fact, I would say not just here, but probably for any chief marketing officers. So if you just said that, I think understanding digital and understanding the intersection of not just like data, how data informs, how advertising is served, how data informs everything. I think that every chief marketing officer, probably everywhere, has to have some kind of digital background or digital acumen in order to be a chief marketing officer, because like marketing is digital, digital is marketing. And then, even as we think, I don't think this is mature yet, but as we think about fraud in advertising, like click fraud and all of that, it will be interesting to see how use cases evolve with how advertising is served, especially in digital spaces and in connected TV and everywhere else. And whether or not on-chain can evolve to actually help in the advertising space. It'd be really interesting to see how crypto and blockchain can evolve in that way. And then this might be almost more radical, but how payments then are transacted directly, again, without as many middlemen, but within advertising. Like that's really interesting. It might sound more blue sky. I don't know of any situation just yet where that's actually matured, but it will be fascinating to see all of the use cases where payments and the authentication of the activity that you wanted to happen all converge as one, and it's seamless. I don't know. I probably sound like the crazy person now, but that's just where I see marketing heading.
No, it's wonderful because we often talk about a lot of these use cases inside of crypto, only we put labels on it, like decentralized identity, for example. But payments is a massive killer app for crypto that I think having these things either be paid out on stable coins, on crypto rails, something like that. And I think definitely seem like the future. So I love the fact that you're kind of bringing it in and just putting it in the context of the real world of how would people use this, and what do what do marketing officers need to know about this stuff. Melanee, it's been great having you. One last question before I'm going to let you go. Like, any advice you would share with other nonprofits who are considering crypto donations today?
Yeah, I think my biggest advice for other nonprofits is meet your donors where they are, because they're in lots of places. And if they have an affinity, if they, meaning a donor, has an affinity for your particular charity, they probably are in crypto in lots of other spaces and places, and would probably embrace wanting to work with you in that way. So that's the biggest thing, is meet donors where they are. And they are in this space for your charity, whatever the charity is. Like, people who want to give to St. Jude Children's Research Hospital probably have an affinity for health. They have affinity for children. Maybe they have an affinity for science and research and advancement. Maybe global, because at ALSAC St. Jude Children's Research Hospital is a global mission, and we work around the world. And so for us, that's our mission, and people are everywhere. Could be the same for other charities too, where they may not know that people love their charity and are in this space. So I think that's the biggest thing. Meet people where they are.
Yeah, this has been an excellent interview. Thank you so much, Melanee. Once again, this is Melanee Hannock, the Chief Digital Innovation Officer at St. Jude Children's Research Hospital. Melanee, before I let you go, like really quick, if someone wants to donate to St. Jude's via crypto, how could they do so today?
Yeah, so they can donate at stjude.org/crypto. And that, once you go there, you can see how you can donate to St. Jude. And we appreciate everything. And again, I'm at ALSAC, St. Jude Children's Research Hospital, so the fundraising and awareness organization for St. Jude. And we appreciate any donation that anyone might want to give to the mission for the kids.
This has been excellent. Thank you so much, Melanee. It was wonderful having you.
Thank you. Appreciate being here.
So it was great to have Melanee on, but now we have to face the real world of what's been happening inside of markets. And for that, I'm going to bring in Georg. Georg, can you talk a little bit about what's been happening here?
Yeah, for sure. Thanks, David. So I think last week has been mostly marked by consolidation across the space for most part after the aggressive sell-off last week on Monday. But overall, this consolidation or recovery that we've seen has been somewhat bifurcated, where altcoins as a segment as a whole have been struggling to gain momentum and strong bids, I would say, while Bitcoin, ETH, and also Solana recoveries have been fairly strong. So, for instance, just 3 days after Bitcoin hit 49.5K, we touched 62.5K again. And this was, by the way, aligned with the 200-day moving average. So that's now a strong resistance here that we'll have to overcome before we can continue looking at the other bullish targets. So right now, consolidating BTC around 59K. ETH could also be interesting here because it's at a support level versus Bitcoin on the ETH BTC pair, 0.045. And it feels like a lot of negative sentiment could be baked in after we've seen some period of lower than expected, I would say, ETF inflows as well. And if you compare ETH on an RV basis versus Solana as well, it also feels a little bit like Sol has been losing some momentum versus ETH. But I believe David Hahn is going to talk a little bit more about that in detail later on.
Do you see any major shift in terms of what's being used as the beta for crypto right now, either ETH or Sol? And I know that there's been a lot more news surrounding altcoins recently. Like I think Grayscale launched the Sui Trust, for example. How do you see all this kind of playing out?
Yeah, it's a super interesting question, David. So I think in general, as I mentioned, I think a lot of altcoins are obviously struggling a little bit with the demand here and have also fairly inflationary unlock schedules, which are also not helping, but there's definitely momentum-based trades here and exceptions. And you mentioned Sui. I think it's a great example over the last week. So Sui put in a 2x from the bottom last week, Monday, which comes on the back of a couple of news. So they put out the Misty SETI update. There was increased engagement on socials. So Raoul Paul put out a big thread on why he likes it, for instance. And then we also had the Grayscale Sui Trust launch as well. And I think it's also interesting to look at the anatomy of this rally, actually. There's open interest, for instance, was up around 400%. Over the space of a week, roughly, while the funding rate yesterday evening was at -70 to -80%. So in situations like this, you can, of course, often get markets squeeze higher as some shorts get squeezed out of their positions. But I think in general, the market as a whole is quite careful with betas at the moment. And Sui is probably one of the exceptions over the last week. And the majority of institutions seem to stick to larger coins here at the moment.
That's interesting. And, over the course of the last week, we've seen that some of the macro pressure that kind of contributed to the move last weekend and into Monday feels like it has moderated quite a bit. And, we did cover a lot of that in our last podcast. What do you think here, Georg? It doesn't seem like there's been any material changes, anything to look forward to as far as the CPI tomorrow, for example?
Yeah, I agree with you. I don't think anything has materially changed over the last 7 days or so. We had PMIs this morning in the US, which were slightly weaker. As you said, I think CPIs later on this week are going to be key focus in terms of looking forward ahead to the Fed decision of whether it's going to be 50 basis points or 25 basis points in a month's time. And I think the labor market data is going to be key to watch out for as well.
Yeah, and I think for some of the listeners, we should also be aware that the Jackson Hole Economic Symposium is actually coming up next week. And that's going to be from August 22nd to 24th. That's also very likely to be fairly relevant, although I'm not sure what Chair Powell is going to be able to say here that will assuage markets. But I think everyone's going to be watching to see if, September is going to come in at 25 or 50 basis points. Markets have, of course, expecting the higher one, but I don't know. I would be kind of curious what you think, George, but I think it's like a 50-50 shot here. And, if he disappoints markets, I'm not sure what's going to happen. What do you think?
Yeah, I totally agree with you. I don't really have a strong opinion at this stage. I think it's largely a 50-50 here. I think when I was checking earlier, we're pricing at about 38 basis points of a cut. So, which is again, like as you say, as close to 50-50 as you can get probably. I think, the key will be just to watch the data here over the next few weeks. And then we'll go one way or the other here.
And we're always a little bit sensitive to politics here, but I feel we should mention that there have been some things that could be contributing to the price action recently. There's been some geopolitical tensions. George, if you can kind of walk us through that. But also we saw a headline out about the White House and some crypto executives meeting some White House officials to discuss policy. And I think the big kind of difference that we've seen here is that this is including several senior figures in the White House who are actually directly responsible for crypto policy. But George, appreciate your thoughts here.
Yeah, for sure. I think it's a great sign that obviously the White House has hosted this crypto roundtable. Obviously, that engagement with the crypto industry, I think that's very healthy to see. I think in terms of the geopolitics story that you mentioned, obviously we're talking about the Middle East here. I think again that's been sort of lingering in the background. I think it's important to keep that sort of in the back of your head because that can definitely contribute to volatility in the short term. And definitely key here to continue watching headlines. I think one other story that was interesting over the last couple of days is the BitGo WBTC partnership with Justin Sun and Tron as well. That's been interesting in the context that Maker actually, for instance, or if you look at the reactions of the space, right? So Maker, for instance, put out a proposal to sell their WBTC from their reserve, which is interesting in the context that, for instance, Galaxy pulled out of a potential BitGo acquisition not too long ago.
And I would love to kind of bring David in here because this seems like a very on-chain topic. David, love your thoughts here.
Yeah, this is really interesting because, to be quite frank, Bitcoin and DeFi today is mainly done through Wrap Bitcoin, which is the Bitcoin bridge from Bitcoin, native Bitcoin to Ethereum. And so most of the Bitcoin transactions that you see on Ethereum are done with Wrap Bitcoin. They control over 90% of the market. And so kind of seeing this concern around the security and stability of Wrap Bitcoin I think it provides some opportunity. Back in the previous cycle, 2021, 2022, you saw some alternatives. For example, TBTC was another alternative that was, had several $1 billion in market cap, which has, kind of come down since the 2022 bear market. But I do think that this kind of brings in a number of questions. And I think kind of just to give a little bit more color to what George said as well. One of the reasons that they're trying to do this Bit Global partnership is because they're trying to move some of the jurisdiction out of the US. So they're trying to remove the US jurisdiction, null oversight of Wrap Bitcoin into a joint venture that is going to be held partially in Singapore and Hong Kong. So I think that's kind of also leading to some concerns about oversight and what that might mean for Wrap Bitcoin. But I think this is definitely really interesting to watch and just to keep an eye on, especially for anything on-chain. For example, the biggest Uniswap pool on-chain today is the Wrap Bitcoin ETH pool for Uniswap v3. So definitely a lot of potential shakeups in terms of Bitcoin DeFi today before a lot of the L2s or Bitcoin L2s have gone live.
And a lot more on-chain to come a little bit later. But real quick, before I let you go, George, I do want to talk about flows. I know you talked a little bit about ETF flows already, but I'd be kind of curious what you're seeing right now from institutional investors.
Yeah, sure thing, David. So I think it's really what you would expect by looking at the price action. So I think we've seen a good amount of demand for BTC and ETH, some buyers stepping in towards the middle and end of last week as well. And I'd say definitely, strong buys towards Bitcoin and ETH. And yeah, to me, it feels like no one is really in a rush here because a lot of folks are probably expecting more volatility to come until we get potentially more accommodation from the Fed in a month's time. I think the other interesting here in this context is that we continue to have obviously volumes. Typical summer period, right? Volumes are a little bit lower overall, despite the volatility. And liquidity-wise, it's interesting because you do have that gap between BTC and then ETH and Sol, and obviously things much further out on the curve. And in the end, Bitcoin is digital gold is probably the most competitive narrative around within crypto at the moment, and kind of underpins that institutional bid for BTC.
Thanks so much, George. This was great to kind of get your views. Moving on, let's talk about what's been happening in the Web3 space. David, I understand that we saw a vulnerability patch coming out in Solana, but it got a mixed reaction from the community. And George already alluded to the price action in Sol ETH. Could you just walk us through what happened there?
Yeah. At a high level, there was another vulnerability discovered in the Solana client. Essentially, there's only one real execution client on Solana today, and the patch was, kind of communicated by the Solana Foundation to a lot of the validators, and so they released this fix to over 70% of the network stake before, mentioning it publicly. And I think this is kind of a very interesting kind of direction that they've taken. Previously in February, the last Solana outage was actually caused because they also discovered a bug, and then they patched that in public. They pushed the solution to their GitHub repository, and before they could coordinate, a cut of a new release of the fixed version, someone else had actually exploited that bug. And so this seems like they're going to, or it's like a fix of what happened several months ago, where they're saying, "Hey, we learned our lesson. Right now, given that there's only one client out there, we can't be too public, too transparent about these emergency bug fixes because someone might exploit these things beforehand." So on the one hand, I think that's excellent for network stability. I think that's great for the users. But on the other hand, it also begs some questions around centralization. How many things are going on behind the doors, behind closed doors. And so I think that regarding Sol ETH price action, we saw Sol ETH hit all-time highs following the recovery of the sell-off last week. That kind of was put stopped in its tracks on this news. So I just think it's something to be aware of. And I think it's very promising that we have more clients coming out. We have Firedancer, we have some Zig-based clients. We have a lot of activity happening on that front, but that might happen in several months. We have Breakpoint coming out next month as well in Singapore, which I think could be the catalyst for a number of big announcements. But in the meantime, this is kind of the state where we're at on Solana.
And this has been a common criticism leveled at Solana. It's centralization. As you've mentioned, you're going to see Firedancer launch other clients. It's diversifying. I mean, functionally, is this going to remain the case where it has to change just because of all these developments that we're seeing on Solana?
Yeah, I think the biggest one is just going to be having multiple clients, more diversification of validators. I think that it's going to change eventually. I think there's a question about timelines, and I think there's also going to be a question of what this change will look like. So I think one thing that's a little bit underappreciated on the Ethereum side is that today, with all these, client developer calls, you're managing 4 to 5 different, consensus and execution client teams, all with their different stakeholder priorities. Firedancer, when it comes out, it'll be 2. 2 is a bit easier to manage. But then as you get more and more, I think it's going to be worthwhile and also very interesting to watch how this kind of discussion evolves, and what happens if, say, 2 clients say, "Hey, we don't want to have this, included in the next upgrade." And I think that's something that you see, for example, on Ethereum today, where there was a lot of debate around what's going on with the Pectra upgrade that's supposed to come out sometime next year. And we might start seeing more and more of that on the Solana side. As you get more decentralized, you get more distributed, you do end up moving slower. You're a bit more resistant to some of these, immediate downturns, like, chains going down or exploits, but at the same time, it's harder to make the same rapid progress that you've been making before. And so we're starting to see, I feel like with multiple clients, you might see Solana starting to enter this. I wouldn't call it ossification. I think that's too strong. I mean, Bitcoin, I feel like might be there, but Solana is definitely still charging full steam ahead. But that's going to be inevitable, especially as we talk about these decentralized distributed systems.
And that's a good segue into our next topic, because you actually just published a paper on ETH and the L2 landscape. And, a big part of this has to do with what has materialized following the Denkun upgrade and what's going to happen ahead of the Petra upgrade for Ethereum. And of course, this has impacts on the ultrasound money narrative that Ethereum has. But the big question a lot of our institutional investors have is, are L2s extractive to ETH value? So just give us the big topics, the TLDR of your paper.
Yeah, I think this paper is quite important because there's been a lot of discussion around whether or not L2s were the right choice for Ethereum, whether or not they could have scaled to L1, what kind of cost trade-offs there would be there. And so when I wrote this paper, one thing I really wanted to look at was what are the trade-offs specific to L2s versus scaling, another scaling approach like sharding or what Solana is doing, and how that might materialize on ETH. Obviously, there are certain trade-offs around like user experience, liquidity fragmentation. I kind of wanted to put that to the side. So I wanted to focus a lot on what actually happens in terms of just scaling block space in general. And I think if we look at the first chart here, which is actually just transaction counts over time, I would say that in terms of block space throughput and block space availability, by all metrics, L2 scaling has been a huge success, right? Over the last 18 months, we've seen a 6-fold increase in total block space. If you're talking about just L2 specifically, we've had a 12 or 11-fold increase in terms of block space. We've gone from around 1 million L2 transactions at the start of 2023 to around 5 million L2 daily transactions in 2024. And following Denkun, that number has actually doubled. So you've seen this huge increase in terms of how much available block space there has been for ETH-denominated transactions and transactions that settle down to Ethereum. So I think that from that metric, from purely scaling, it's been an incredible success. Now, the question that most people have been having now, though, is a second order effect, which is, all right, what does that mean for ETH, the asset? And I think if we look at the next chart, which is just kind of transaction fee breakdowns and how much ETH is being spent on transactions, you see that these L2s, even though more than 90% of all ETH activity is occurring on that today, they only account for less than 10% really on average of transaction fees. So most of the transaction fees that are being spent in ETH today come from mainnet Ethereum. And so there's this weird bifurcation around how much ETH is being spent on mainnet ETH compared to how much throughput it has. And so you certainly see some of these weird phenomena on this side. Now, if we actually look at the next chart, which is kind of the average daily fees that are being spent per year, we can see that there's actually been a big drawdown from the 2021 peaks. And so one of the big criticisms over the L2 scaling roadmap has been, hey, because we're scaling via L2s, the amount of ETH that's being driven by fee demand is dropping over time. And I think if you see that where we're at today is around 1/3 of what we had in our peak of 2021 in terms of average daily ETH spent so far. I mean, this is 2022 data up until August 1st, so that's how much ETH has been spent, somewhere around 2,500. And you're starting to see a growing proportion of it going from L2s, but not enough by a long shot, not enough to kind of account for the lost fees from the L1s. And then so I started asking myself the question, what's the trade-off here? Is this because of L2s or is it because of scaling in general? And so if we look at the last chart, I think this is kind of where, for me, the question or the answer becomes very clear, which is, I don't think this is not an L2 specific trade-off. This actually comes from the fact that we're dropping block space costs at a rate faster than we're seeing new transaction counts. And I think this is kind of, almost a case of suffering from its own success, where we're lowering throughput on these L2s, we're lowering costs on these L2s, but we're not seeing the same sort of transaction demand to offset these costs. And so what you see here, the blue line is kind of where we were in 2021. So if we increased our transaction counts by the same rate that the average transaction was dropping along that blue line, we would actually have the same cost structure or the same total amount of ETH spent as we had in 2021. The green line is kind of the line of best fit that we have from 2020 to 2024 along that same cost structure. But the dotted red line is kind of what we think is happening in reality, where we're actually seeing a much faster drop in the average transaction count relative to how much, or if much faster drop in the average cost relative to count. And so it feels like we might actually continue this trend, and it doesn't seem to be something that is L2 specific, except insofar as to say that L2s have actually been scaling too fast, which I feel like is kind of in a separate conversation, which I've never really heard anyone say, hey, we should have blockchains be more expensive so we can maximize the amount of fees being spent. I mean, maybe there's a very small camp, but I think generally the principle has been, the more transaction count you have, the lower costs you have, the better it is for everyone because you have more people on these ecosystems. And we've hit this point where we're lowering the costs. And we've seen an increase in transaction counts, but I guess not fast enough for the transaction counts to keep up with the cost drop. So I think that's just in general a scaling phenomena that we'll see. And then kind of mapping this to Solana, certainly Solana is having its moment right now. There's a lot of transaction fees there, even though they're processing more transactions at a lower median cost than Ethereum. But I think one big thing to kind of look at, and we kind of discussed this a little bit more in depth in the paper, is how much trading impacts this and how sustainable that will be in the long term as you get more and more trading, more and more mature trading systems, lower slippage rates in DEXs, and overall less meme coin activity. What does that mean for fees in the long term? So I think that's one question we grapple with a little bit, which is if blockchain scaling in general will reduce overall transaction fee spend, what does that mean for the underlying L1 asset? And so we talk about that in the paper. And I think the TLDR for the answer is that you see a lot more utility in applications. So whether that be the base utility in trading pools, whether that be collateral in DeFi, there's a whole suite of applications that I think will be enabled with these high throughput, low fee transactions that we don't know yet. In the same way that going from 3G to 4G on our iPhones or Androids have enabled all these new sorts of applications, I think we'll see something similar in crypto. And I think we're still early in that regard. But I think that eventually the utility in applications will be the long-term demand driver as fees drop over time.
Thanks, Dave. That's wealth information. And I think that there have been a lot of headlines surrounding ETH inflation and concerns around that ultrasound money narrative itself. And I like what you're alluding to here, which is that, of course, there's clearly a trade-off, and it sounds like you think there's only comparatively minor reduction in ETH demand that's going to actually result from this L2 focused roadmap. But how do you kind of make sense of what we're seeing then in terms of this rising ETH inflation, if in fact it's not being generated by the L2s? Because I think a lot of people point to the fact that the ETH that's actually represented by the L2 fees, for example, isn't burned, things like that. So how do you reconcile that?
Yeah, that's a great point. And I think that the L2 trade-offs, I would say there are two big ones. The first one is exactly what you said. There is no EIP 1559 style burn on these L2s. And the second thing is that sequencers, because L2s are currently still reasonably centralized, they can capture the profits, which is a total, fees that are being spent on L2s minus the amount of rent that they pay to the L1. And I think that, these are definitely trade-offs, and they do impact ETH, but I think they're quite minor in general. And I think one thing that kind of blew my mind when I was running through these numbers, which is if you actually burned 100% of L2 transaction fees, so if you took all of it and you burned it all, ETH would still be inflationary today, right? So that means that the current net issuance that we see in ETH is bigger than all the fees that are being spent on all this new scaled block space on these L2s. And so for me, that was a very big wake-up call, which is like, hey, we have this extremely scaled block space at extremely low fees, and that's causing, some people would accuse that of causing inflation, but the reality is it's just scaling in general. It's the fact that we have this high throughput, low fee block space. Even if all those fees are burned, ETH will still be inflationary. And so what I would say to the ETH ultrasound money narrative is that, first of all, it comes down to the growing staking ratio. A big part of this is we've seen more than 4.5 million ETH kind of being added to the staking pool in the last around 1 year. And that's a tremendous amount of ETH. And as more and more ETH gets staked, one thing that people don't realize is that there's overall net issuance in terms of the amount of ETH and in absolute raw numbers. So, I don't know the exact number, but if we had around 2,000 or 3,000 ETH issued per day, as more and more people stake, that number goes up, 2,000, 2,500, 3,000, even if the total percentage kind of tapers and asymptotically approaches 2% overall inflation rate. And then the other part, which is, the sequencer profitability. Sequencers, yes, they are making money from, the L2 operations. But one thing that we've noticed is that most of the cost reductions are actually going to users, and that it's not a guarantee that after Denkun and the introduction of this cheap blob space storage, we don't actually see all these sequencers suddenly become massively profitable over time. I think they were profitable before Denkun. They're still profitable now. In fact, some L2s have become less profitable after Denkun, which is an interesting dynamic. And so really it comes down to just having more applications and more users on these L2s that really ultimately determines profitability. And I think that comes from pushing these transaction counts up, getting more users on board and on chain, which I think overall is a good thing. And I think that people in crypto should generally be rooting for that to happen.
So let's put a finer point on this. The question at the top of this interview was, are L2s actually extractive to ETH? Or do you think extractiveness is just a red herring when we are actually analyzing the long-term ETH supply dynamics?
I would say it's a red herring. And I would say that the question shouldn't necessarily be, are L2s extractive to ETH? I think the answer there is yes, but to a little bit. I think the bigger question should be, is scaling extractive to ETH the asset? And I think that's a much harder question to answer, because then you start to come into these other dilemmas, which is, all right, maybe it's extractive to ETH. Maybe scaling block space a lot is actually going to hurt the amount of ETH-driven demand from fees. But at the same time, we have to recognize that there's a lot of other, blockchains, and this block space is just increasing in general outside of the Ethereum ecosystem. We have a lot of great block space, a lot of great things happening on Solana. We have a lot of other, blockchains happening too, like Ton, Sui, Aptos. A lot of these newer chains also are, increasing block space in general. And so I don't think that you can just have this magical world where only Ethereum exists and all block space on Ethereum is the only way to go. And so lower fees and scalability is inevitable. And I think that the harder, kind of conclusion to reach is just scaling in general is a possibility, really, that scaling in general might be what's really driving this extractiveness on ETH the asset, not L2s specifically.
Yeah, I'm having trouble with that word, by the way. So, this has been great. Before we leave the topic of Ethereum, there seems to be lots of efforts going on right now under the hood for chain abstraction. This is not a new topic, but it was something that Vitalik Buterin, the co-founder of Ethereum, recently mentioned. David, what's the latest here?
Yeah, I think this is, chain abstraction is pretty important, especially with the rise of different L2s. And I think this is one of the real trade-offs for L2s is that, if you have ETH on the mainnet, if you have ETH on Base, you can't really spend these across chains. If you have different smart contract wallets, they might not generate the same address on different chains as well because of the differences in EVM compilation. And so there's a lot going under the hood here. I think one of the biggest things I would want to highlight is this new framework that's being developed, something called Magic Spend ++, which is kind of built off of the work that we've done at Coinbase here, where we have a tool called Magic Spend, which allows you to spend your Coinbase assets on Base, essentially, where you can just send a transaction and you have this almost magic, right? Where you can spend your centralized exchange holdings on chain. And so Magic Spend ++ is a new proposed framework where you can kind of do this across L2s. So not just spending your Coinbase funds on chain, but you could also spend, say, your Arbitrum funds on Base or vice versa. And I think that's something that would be able to solve this issue. And I think the technological roadmap for cross-chain interoperability, scaling, execution is something that's starting to kind of crystallize down. And I think it's going to be promising, even if there are challenges in the short term.
I look forward to that. And I think that even though it's not put in these terms, the idea of liquidity fragmentation across these L2s and across chains, really, I think it's just been something that has acted as a drag on the space. So I would love to find ways to kind of help resolve that. But that is it from us for this week's episode of the Coinbase Institutional Markets Call. Ben will be back next week, so please tune in for the latest in crypto markets. And everyone have a good day trading.